Jim Roger joins us now. He's been advising, he's been sharing his views on why he's bullish on gold, silver, and where he's been investing and picking his spots in this pandemic crisis. Mr. Rogers, fantastic to have you back. Good morning. I know you've accommodated this interview request in the middle of a very important lunch, so thank you very much.
I'm delighted to be here, Nick Kuntz. I'm still a big fan of ET.
Well, thank you very much. Your endorsement really, carries a lot of weight for us. Mr. Rogers, we've seen a risk-off rally in global markets. Now, I know it's impossible to predict where markets are headed and where commodity prices are headed, but the fundamental structure which you argued and which you indicated to our viewers, that buy gold and silver, is that long-term thesis still intact?
Yes, I plan to buy more gold and more silver when they go down. I think I'm not good at market timing, but I think that they're both having a correction now because many people have to sell their gold and silver to buy food. So I am waiting, but I will be buying more gold and silver sometime this year.
Fundamentally, Mr. Rogers, what makes you bullish on gold and silver? Is it because of low interest rates, or is this largely because of something else where fundamentally we cannot fathom right now, but world will realize it later on?
Nearly every government and nearly every central bank in the world is printing huge amounts of money and borrowing huge amounts and spending huge amounts. Throughout history, when currencies have been debased, people have turned to gold and silver, and when people have lost confidence in governments, they turn to gold and silver. Many people say they should not. It's the wrong thing to do. It doesn't matter, Nikuj. As you know, I'm a peasant, and all of us peasants know that gold and silver are good in the end. Let the politicians talk all they want. Let the academics talk all they want. Us peasants know that we better own some gold and silver when things go wrong.
A country which you track with a magnifying glass, almost with a telescope and a microscope, both in this case, is China. And if one looks at the data points which are coming from China, there has been a delightful surprise, both in terms of consumption and the amount of steel and suddenly the iron ore and everything they're importing. Why is that?
That's a very good question. I don't know why they've been doing a better job, if they have been. I've learned not to believe any government, including the U.S. government, but it looks like China, either maybe because they had the virus first, but it seems that they have done a less bad job than most other countries in the world. Certainly the United States has not done a good job at all.
What is the importance of this year's US presidential elections? Do you think a lot is at stake?
Well, there's always something at stake, but it's mainly if Mr. Trump wins, his friends will be better off. If Mr. Biden wins, his friends will be better off. Things will not change that much. Of course, Mr. Biden would try to raise taxes, which would make a difference to the economy. But unfortunately, fortunately or unfortunately, there's the Congress, there's the courts, there's the bureaucracy. You cannot change that much in a short time in the United States. It's not like England or maybe India or some other places with a parliamentary system. It takes longer to make real change in the U.S.
So do you think for someone who is not as experienced as yours, in terms of tracking market history and importance of market connections, should one wait it out to see the outcome of US presidential election, or should one not bother because in the long term everything will equalize?
One should only invest in what one knows a lot about. If you know a lot about something, you will know better when to buy it than I will, and you will know what to do better than I will. I mean, don't listen to me or people on ET or on the internet. Stay with what you know, only with what you know, and you will know when to buy much better than anybody else. The idea that you can make money by listening to me or people on the internet or even ET is absurd. The way to make money is stay with what you yourself know.
Mr. Rogers, last time when we spoke, you said, I'm buying dollar. Even though you admitted that it's not a great idea, you said, look, I have no other choice but to buy dollar. The dollar index has weakened, now it's strengthening. What is the way out for somebody who wants to invest in the dollar?
Well, the United States is the largest debtor nation in the history of the world. It is a terrible fundamental currency. But when people have trouble and turmoil, they turn to a safe haven. They think the U.S. dollar is a safe haven. That's why I own a lot of U.S. dollars. Yeah, it's down now, but so what? Markets always fluctuate. In my view, when turmoil gets bad in the next year or two, the dollar will get overpriced, may turn into a bubble, and that may be the time when I have to sell my dollars. If it gets very overpriced, I will have to sell, because I want to repeat, Nukuns, the United States is the largest debtor nation in the history of the world. This has never been good for a currency in the long run.
What is stopping the world from changing dollar as a reverse reserve currency? Because crisis always leads to this change. I mean, we've seen that British pound, which was a reverse reserve currency till about World War II, it changed.
Very, very insightful. Yes, well, there are countries now looking for a competitor to the U.S. dollar: Russia, China, India, Brazil. There's some Iran. There are some countries trying to come up with a competition for the U.S. dollar, and the world needs it, because the U.S. dollar is a monopoly, but Washington abuses the monopoly. If they get angry at you, they cut you off. That's not fair. That's not what reserve currency is supposed to be. So several countries, including India, working with other countries, are looking for a new competitor for the U.S. dollar. So there are many reasons. Economic fundamentals are not good for the dollar, and political changes are not good for the dollar.
Mr. Rogers, if one has to look at banks, and I'm not just referring to banks in Asia like HSBC, which have a challenge, banks globally are going through a very strong chop and churn. So if an investor who has a 2 to 3 year time frame, do you think it's a time to bet on global banks right now? Because that's perhaps the only big pocket which is right now cheap and nobody wants to buy it.
Are you saying bonds or banks? If you're asking about
Mr. Rogers,
bonds,
I was talking about banks, global banks.
Oh, banks. Well, you're right. Banks are very, very cheap. There are huge technological changes taking place in the banking industry. But if you can find banks that are up to date and that understand that banking is going to be on the computer in the future, you can probably make investments. Some banks are making changes fast, some are not. Be sure that if you buy a bank, even if it's cheap, that they are making technological changes to put banking on the internet. You know, my children will never go to a bank when they're adults. The banks on the corner are going to disappear all over the world. So be sure that if you buy a bank, you have one that is up to date and modern.
Mr. Rogers, you come from an era where value investing was important. You have always advocated that buy things when they are cheap, when they are beaten down. But what we are looking at right now, Mr. Rogers, is the following. Expensive stocks are getting more expensive, cheap or value stocks are getting cheaper every day. If you bought into a steel, cement or infrastructure company, well, it may be attractive to historical valuations, but those stocks are just not making money. But if you bought into an IT, a pharma, a Bitcoin, or let's say a cloud company, even though it was expensive, it's becoming higher, it's going higher. Why is this? Why is that technology stocks are getting more expensive and value stocks are getting cheaper?
And it's extremely insightful. Again, see, you should watch ET. You'll learn a lot watching ET. It always happens towards the end of a bull market. People turn to things that they think are safe, and then you have sort of a blow off. It's called in English, it's called a blow-off, and you have a blow-off in the market, and that seems to be happening now. You know, Apple and Google and those stocks never go down. So we seem to be having a blow-off, which usually happens towards the end of a bull market. Not usually, always happens towards the end of a bull market. And that's what's happening now. It's another sign to me that this bull market is getting very old and very late.
Mr. Rogers, historically, every time when bull markets have got peaked out and bear markets have started, it's largely because of leverage in the world, whether it was in 2008 or 1987. What is your view on the leverage in the world right now? And do you think when interest rates are zero, does leverage really matter?
It matters a huge amount. We had a big problem in 2008 because of too much debt in the world. As you know, since 2008, everywhere, debt has skyrocketed. America's trillions of dollars. Even China has a lot of debt now. China had little debt 20 years ago. So debt is going to be extremely important in the next bear market. And that's one of the reasons we're going to have a very, very bad bear market next time, because there's so much debt. I don't like it, but it's a fact. You have to deal with facts.
So, Mr. Roger, what is one thing which in your mind investors are ignoring? I mean, you can see it right now, some may see it after a month, some may see it after years, but there is something which you think is a ticking time bomb and you don't know when it will explode, but eventually it will explode, and when it will explode, it will haunt and hit everybody.
Well, the one thing people are ignoring is, they think that Amazon can never go down. They think that Apple can never go down. These stocks, they think that Alibaba can never go down. You know, and I know, as well as just read market history, you will know that they can go down and that they will go down when we have a big bear market. So anybody, you know, I get people, young people writing me all the time talking about how we must buy more of these stocks because they will never go down. I say to myself, please read some history. They can go down and they will go down when we have a bear market. And we will have more bear markets. Some people think, well, we'll never have bear markets again. We will. Don't worry. Watch E.T.
Well, Mr. Rogers, you said that a lot of young people are writing to you and they feel that Amazon and the FANG stocks will not go down. But our audience at ET also has a lot of old people, and when they write to us, they are asking that how can they stay rich or remain rich when interest rates are low, when fixed deposits or bank deposits are giving you no returns. What is the option out for them to maintain their lifestyle and stay and preserve their capital?
Look, I have the same problem. Everybody in the world has this problem now. It's a time that has never existed in world history, when major interest rates have been zero or even negative. So it's very difficult for everybody. But my answer is, don't get too confident. Don't try to reach for something, because it is better to earn 1% a year than to lose 3 or 4% a year. And if you start investing in things you do not know about, you're going to lose money and you're going to suffer. I don't like it either. None of my friends like it. But be very careful, because when it ends, and it will end someday, many people are going to suffer badly.
Could low interest rates fuel a very strong comeback in across the board commodities that will stroke inflation, and this whole low interest rate regime will get challenged? Today we want inflation, sir, because inflation means pricing power. But the minute inflation gets out of hand, well, investors, bankers would say control inflation. Is this the biggest risk in next 12 to 18 months or 12 to 24 months, that inflation could come back and could surprise us and haunt us?
I don't know if it'll be that quickly it will come back. Right now, the world economy is suffering badly because economies are suffering. So prices cannot go up. Nobody's buying anything. But there will come a time when that will lead to reduced supply, and with lots of printing of money, then you will have inflation again. I don't know when, whether it's in the next few months or not. I would suspect it'll take a little longer, but it has always, throughout history, led to higher inflation, and it will again. I mean, these are simple things. If you read history, it's not magic. It's not, I'm not so smart, but I just can read history, and I know it has always happened when you debase currencies, inflation comes back.
What do you have to say for those who bought stocks of Tesla? Elon Musk is perhaps the new hero for everyone.
Well, if you read the press, Mr. Tesla is one of the smartest people in the world, except for Mr. Trump. Mr. Tesla and Mr. Trump are two of the smartest people in the world. I see what's happened to the price of Mr. Tesla stock. I have seen this before. I do not own it. I am not shorted. I have no position. I have seen this before. It's going to crash when the next bear market comes. I have no idea when or how much higher it might go, but I know that stocks like that always come down a great deal in the next bear market. Some of the accounting things that Mr. Musk does are questionable. So apparently it's a great car, apparently it's a great technology, but it's not a great stock for me at these prices.
You have young children, Mr. Rogers, which means that they have advantage of time. So if you have to, let's say, advise your children to start an ETF in a country where you think that there is going to be a structural change, a decade or 2 decades of big changes, which is one country where you would advise your children to start an ETF?
I guess in 2020 it would probably be Russia. Russia's hated right now. There are positive changes taking place, not too much debt, lots of raw materials. I know it's a strange name, but to be successful, you have to look for strange countries. If you're talking about for a 12-year-old child, you know that the world will change dramatically. Maybe Russia, maybe Venezuela, countries that are hated, countries that are cheap. That's where you look to find big profits over 20 or 30 years.
Before we wrap, Mr. Rogers, now India, in a sense, couple of years ago was enjoying a premium positioning. But guess what? India is no longer the darling of global investors in terms of returns and in terms of asset allocation. So in terms of perception, as a global investor, because you have choice to look at all other countries, where does India fit in? Is it in middle of the road, end of the road? Where is India in terms of perception and in terms of an investment destination?
India is one of my favorite countries in the world. I tell people all the time, if you can only visit one country in their lifetime, it should be India. It's fabulous for many reasons, but I am not an investor in India now. I'm not an investor in most emerging markets now. We need to, when the bear market comes in the next couple of years, emerging markets, including India, will go down a lot. Plus, India has been building up a lot of debt. I mean, it's not as bad as Japan or America or someplace, but India's been building debt. I don't like that. Mr. Moody has always said he's going to balance the budget, but he never does it. India's not on my list at the moment. If it goes down enough, of course it will be on my list.
Mr. Rogers, I want to go back to that question where we talked about a country where you would like to invest for your daughter and for your children. But if you have to gift something to your daughter as just a token of what your thoughts are, will it be a gold brick or will it be a Bitcoin?
A Bitcoin? No, not be Bitcoin. It would be gold. I was certain want my daughters to own gold and silver. Everybody should own some gold and silver as insurance, if nothing else. If you get it right, you'll make a lot of money in gold and silver. Bitcoin is going to money is going to be on the computer. It already is in some countries, but it's going to be government money. Governments do not like to lose their power. Governments do not like to lose their monopoly. Governments are going to make it legal to only use their money in the future. just as has always happened. So I do not plan for my children to own cryptocurrencies. I do plan for them to own gold and silver.
Mr. Rogers, 10 years ago, or let's say 15 years ago, Apple existed, but it did not have that kind of a market cap. Facebook was not even listed. Netflix, nobody knew that a CD company could become a streaming company, and Tesla, well, it was not there. Things have changed a lot in the last 10, 12 years. If you have to, let's say, pick out one trend which has possibility of becoming a mega trend, because every decade throws it up. You know, a couple of years ago it was Japan, followed by US tech stocks, then it was China, then it's been US tech stock. What would be that trend for next 5, 7, 10, 12, even 15 years according to you?
Well, the most exciting technology I see is, you know, the computer. It's where everything is. It's artificial intelligence is one way to look at it. It's where everything is going to be on the computer. Many people are going to lose their jobs in banks because everything is going to be computerized now. And when that happens, there are going to be enormous opportunities in some new companies and the new technology. I don't have any names. I wish I did. I mean, I know that Samsung and other companies are doing a lot of research, but they're such big companies, it will not change. The blockchain is going to change everything we know. It's going to put a lot of people out of business. But remember, electricity put a lot of people out of business, and nobody's going to get rid of electricity. So if I could find a major way to play blockchain, that's what I would do. And by the way, you know, if you know a company, please don't announce it. Send me an email later so I can do some research.
Well, India does not offer that kind of an, that kind of a bouquet in terms of companies. What we have is largely IT services companies. Mr. Rogers, one final question. This decade, do you think this is going to be a tough decade for anybody, any investor, anywhere? Or should we expect a late single-digit returns?
This is not going to be a good decade. The next bear market is going to be the worst in my lifetime. It is not a good time to be a young person, certainly not in America, because America's built up staggering amounts of debt. I worry about my children and their lifetime. I worry about all of us, including old people like me, but I really worry about young people because the debt is, you know, in 5 years, somebody's going to say, where did all this debt come from? It's going to be staggering, and it's not going to be good for a long time for most countries. Some will do well, but most will not.
Well, Mr. Rogers, once again, really appreciate your time. It means a lot to us that you accommodated this interview request in the middle of an important lunch. So stay safe, sir, and thank you for your thoughts.
I am a big fan of ET. Keep up the good work. Thank you. Bye-bye. Bye-bye.